Welcome traders, and today we are discussing Wyckoff and Gann way of trading the markets. We are looking at the volumetric analysis. Wyckoff interviewed Gann quite a while back, and he responsibly interviewed Gann and made him famous. But he himself made $50 million by the age of 25, and he has had a great career as a broker. He had a brokerage company, and he passed away by age 50, wrapping up his journey on earth with great success. So one of these scenario is understanding the interaction of the impulses through the waves. Because market doesn't move bar by bar, right? It is meeting an objective, according to Wyckoff, by looking at the waves of movement. Because when the orders come in, they move the market in waves. This is where the Elliott waves, Fibonacci targets, everything comes to life. We're not talking about that. We're talking about the potential of waves. When they're coming, when they're ending, when are they losing momentum, and then you can add any other indicators on top of it. So what we have here is the studies, zigzag, and we have the divisor here by 1,000, so we don't see big numbers. In the bracket, that's what you see. So this is the volume accumulation by the swings, and what we have to understand is the loss of momentum and the swing size is the measured move which is taking place. If you take this height, so from here to here there were 231,000 contracts took place, right? The volume, think that way, the net volume was 230,000. In this next wave, in the next wave, right? So we're looking at detecting the wave, what is going on. And this is how we can figure out how much effort was done, and have we lost the power to continue in the direction, or are we looking at reversals? So with that mindset, rest, we don't need any other indicators actually, according to Wyckoff phenomena, right? So we are going to disable, just keep it a plain structure, understanding the market structure through the lens of volume. And then we can always obviously go back 10 years, we can rotate back all the way back, right? 10 years, and we can do it on 1 minute, 5 minutes, doesn't matter. So we are just gonna go and see how Wyckoff has recommended that we trade the rhythm of the market through the waves, and by looking at the effort of risk versus reward, effort versus reward. If you look at this impulse, right, you see how much effort was done, and that it reflects the size of the movement. Look at the movement in NQ. It happened whichever year it was, 2019, doesn't matter, right? So this movement happened, and look at the distance it traveled, and that travel, given that it was half the size of where the market is right now, 1/3 the size, relative to that, it was quite a big move, but the effort, it shows that. Then we have a pullback, and it's pulling back, and look at the effort, 19. So you need to see the impulses going up, the volume impulses, going down, volume impulses. Now this, look at this effort, 400 came down to 19, 20. What is happening? So this is where you see the market is going sideways, but we can also see how much, which side are they going to collapse. Okay, this is a big science in itself, volumetric trading. So this impulse is 20 on the top side, and this same impulse is 60. Now this is where, look at the impulses. It took 20 to move here, and it took 60 to move there. Now if this impulse, immediate impulse, the buyer pressure, you can see buyers were here, then buyers came again here, right? They're trying to make a double top. But here, this is a double top. But this double top and this top versus this top, the behavior is not the same. This was done by a least effort of 20 times 1000, and this was done by 60,000. Now 60,000 should have at least retested the higher. It did not. Now this is where you start thinking that the same distance was traveled, with the effort it took to move from here to here was much easier than this effort. And it did not even retest the top. Now this is what we call as the gap, the volume gap. This volume gap has been created. Now what we do, we are looking to change the direction. Now this is where we're going to certify. We can probably use some indicator at this time if you like. For example, we have a bunch of oscillators here. Rotational oscillator, balance imbalance. We have vortex flow. We have intermarket super oscillator, right? So okay, the turn picker. Let's pick this. Now in context, now you see, now we're looking at the volumetric flows, and we're looking at the volume of the impulses. Effort of the same distance was 4x, 3x, sorry, right? 3 times more effort, and look at the volume. You can also see the same thing in the volume. The volume was 2, here it is 4. 4 plus minus 4 is reversals anyways for us, right? So you see here, what do? You wait for this to, this is 15-minute chart. You can go down to lower time frame and short it, but that's fine. So this is where you can find some opportunities. So how do we trade this opportunity? You can add another one, which we call as polarity studies. We can use some other level studies. We can put some pivots, but right now we'll just stick with polarity. Now here we have a polarity grid. It is designed to move at a certain distance. All right, where we are, this is 12-point separation. We can have another change to that. When we go to polarity, we can say, okay, how much distance do I need to make this work? So that is your Knittel path. This is coming from the NASA integration of the astro modules. So we are looking at the planetary objects for the day, and this is why the lines are going to shift. This gets into sapphirial mathematics of coordinate system of astrology and day rulership. So I have this, right, points per day, this and that, and I'm saying separation points. So I can, depending, so how do you know how to separate things properly? You do square root and square root twice of the price. So you square out, for example, if you do the price is 2000, do a square root, and then do it again square root of that result. So do it twice. That gives you the mathematical rhythm, which is also the Gann secret we just revealed right now. All right, so now that is what you're going to do. So this gives you the stop loss and target precisely. So when this is happening, double top is happening, in real time you will see the volume, and you can just keep this eye and say, okay, the risk and reward is different. Market is trying to retest this. It's not able to reach this. It's not able to reach this. It's a gap fill. Whatever was going on here in 2019, we don't know, but we can replay this. That's the beauty of it. In fact, if you want, you can also make some trades on this practice, where you can really put on the trade as a move fast as you want. And this is where you are putting on the trade. You're putting on the ATMs. Set up your ATMs, put it on, and you can just live practice it, right? You can just move it. You can just see. It'll move. So when this is happening, you watch this, or you can just trade, and you can practice as if you're living, gone back in time, back to the historical future. So you can rebuild the entire portfolio of experience of 5 years, 10 years in less than a month. And then you have a system which is tested. All right, so something like this you can do. So now here is the thing. When we we are already looking for a short. So we hide behind here, 10 points, and we'll end stop loss is here. Entry will be somewhere here, and then we go. It will not be like if you're looking for a double top with this reflection point, you let it pull you in. So stay 2 points behind, then you just roll in. This is how you can trade the polarity volume analysis. All right, so let's get back to just a few more examples before we rock and roll out of this. So market is here. Let's go back to a current state of affairs. Okay, so now this is again, market is going very high, right? Look at this oscillator. Now this reward 28. Okay, look at this risk reward. So much effort was done. Now here's also one thing you have to think. Market went up in the impulse move very easily with 77, easy move, right? Now volume is saying it's going to turn. Don't distract it because you're focusing on this. You're not focusing on actual trading mechanism. Then look at this volume down 116. It should have at least come down to retest this with the risk and reward and effort, right? So they are putting so much money at risk, pushing it down to retest this. Because of this, it did not move. With the impulse up was easier. You can see downwards movement are having some hard time. They're putting so much effort. So this one told us right away, looking at the structure, the effort was here, 77. This distance, if we are doing, at least you should be retesting it with the same effort, or right? It did not. It went half the way with almost 125% more effort. So what does it tell you? That this volume now can be trusted, that this is going to be a push to the upside day. Okay, this is obviously closing afternoon. So at night time, impulse move. See the same thing. So 77 moved so much, 28,000 moved so much, 77,000 moved too much, 116,000 moved very less. So you can see this now. This patterns are showing up, but with volume behind it. So if I have to see in this situation which side is winning, well, seems like the buyers are in a much better impulsive move. So when the oscillator, when we are reaching at this situation that we want to do a line breakout here, we have an apex here, which side are they going to break, and look at the risk and reward which has gone through it, and breakout worked out very nicely in that situation. All right, so that is what you got to see. Okay, now if I look at, let's put some random numbers here. Anyway, it doesn't matter. We can go down to 1 minute. We can go down to 2 minutes. We can go down to 1 minute. We can go down to 60 minutes. So this is where, okay, so now let's look at this. So now you have understood the phenomena. Look at this impulses, 89, 288. 89,000, almost double the effort of going down, hardly broke the bottom. What do you expect will happen when the volume is ready to turn, right? So look at this. So you have to qualify these volume swings. How much effort is happening in the swing, because the oscillation is happening, but you don't know inside the oscillation how much of volumetric is really being punched. Right? All right. So let's go here. Let's go randomly here. Look at this scenario. This is how you should be able to test your ideas. All right. So now same thing. Look at the impulses. 116. We have is moving. Okay, this loop moving, and look at this moving. All right. Huge effort came. Now look at this. 116. This one is 148. This is almost double, triple. So the legs, you can see, even though we are moving the same distance, buyers, how much effort was done. And look at the volume from here to here, the volume. If you just count up and down, you can subtract up and down also, right? It doesn't matter. There are so many rules for Wyckoff, the rhythm trading. But here it is. 140 gave me this impulse. 116 gave me this impulse. 350,000. It should be testing this high with this effort. So what do you think is going on here? Same impulses, 300% more effort, 400% more effort, depending on how you're counting it, right? What are we expecting? We're expecting at least to test this 25,000 levels. It is not able to break this, right? So, and the volume is flipping at 4. And I see this volume effort. This is what Wyckoff was saying. Look at the volume of movement. It's not a single bar which defines it. It's not FEG. It's nothing to do with any of this. Those things will come. If you want to study, now we can add something. Okay, so you want 3-bar pattern. 3-bar pattern is what we have, is called 3-soldier pattern in 20 years back. And now it's now famously recoined as fair value gap, nothing else. There's a 3-bar pattern where we see a momentum. 3-bar soldiers. 3-bar soldiers. So we can check if you like. Let's go and open the internet. Always look at the, okay, so we have a 3-bar pattern, right? So, okay. So that's what it is. Call it a flag pattern, soldier pattern, but this is what it is. It's a 3 bars. Now there's 3-bar patterns in various shapes. Okay. When you see this 3 green bar, you know, how strong are these bars? Are they overlapping each other, or they are having a separation between each other? That is showing the momentum. For example, this is very strong momentum. Right, they are not overlapping. Usually we'll see the bars will be retested 50%. If the retest of the prior bar is not done by 50%, like here 50%, there's a gap like this, fast move. This is where the pressure was. This is where the buyers were aggressively buying. This is where the imbalance was. That means the buyers are hitting the ask and moving the market up in this scenario. All right, this is basic 101, same thing. And now these gaps with the least overlap, this is not a good soldier. This is a normal soldier, 50% pullback. On the stocks, you will see this pattern be used very definitely. Day trading, big companies, when the market is going down, they always buy at 50, buy at 50. That is what is holding this pattern. And if they are moving much more aggressively because of the news or whatever reasons, that creates a gap between the first and the third bar. The jump is what is now famously coined as fair breakout pattern. And there's no reason you cannot use it. So there's a fair value gap which was posted here. It was of the same thing I told you, right? 1, 2, and 3. All right. So that gap is there. That's fine. Now I'm looking to, and also some other things are going on. We are having high and lows, right? So we also have much better. We can do order blocks, for example, and we can get rid of the fair value gaps, right? Order blocks are sitting right there. So what is happening in the order blocks? Why it is happening? Studies we can, sorry, I need to bring back swings. All right. So now you can see I'm looking at some rejections coming from this order blocks which are here, posted here, right? Order blocks, and there's a negative sell order block sitting here as well. This one also have order block, came back from here. But if you just blindly see, that's why sometimes, and how they justify this is, oh, it break and retest, it becomes an inverse order block. All right, great, but you don't understand what is causing the inversion. So that's what you need to understand. So now you see this 44, now this one, right? So this one look at the movement of the market coming down according to Wyckoff. 124, right? Okay, 160. So 288, retest it on 160. You think the same distance, these buyers were so excited to break this, in the same distance, are they still same excited with the same range? They are not. You can see. You can see that 280 versus almost half the effort. Half the effort. Right? So, all right, same thing going down. So 460. This was coming down. Boom. 300. This one 400. This one 300. Like the big. They're very aggressively trying to reach somewhere. So why it stopped here? Here's the question. Yeah, we have order block here, which was reject. This is where it started everything and came back to the same order block right here. This is fine in terms of volume. So volume, this on this side, impulses are almost like 300, 300. This is 450 and 300, right? So this is 400, 400. You can just see 300, 300, 400, 400. Very aggressive moves down. Very, very aggressive move down. But what stopped it here? Is it this 119 volume? It stopped it, right? So at this point, when market went up here big time, this impulse move pullback was 119. This impulse was 119. So they are testing this because they were scared of this move, because this move was rejected big time. So they are trying to come back and test it again. Hey, let's come back with huge power. 300, 300. Now 300 times 1,000, 300,000, 300,000, 300,000. Trying to hit it and say, hey, shall we break it down? We understand this phenomena, right? And you can see psychologically, they brought it to this to see if they wanted to break it. Same thing happens here. They brought it up 300. This is 350. This whole day frequency is hitting, if you see here, 300, 300, 300, 300, 300. You see that evidence? Again 350, 300, right? So market is trading at 350. That's one thing you can see on this day. That at this day, at this algo day, at this balance imbalance day, at this aggression day, at this iceberg day, at this momentum day, how the waves are being propagated and how much effort they are yielding. And this is also going to give you, okay, you can just detect from there itself that, hey, we are moving into 300 wave rhythms, 300, 350, 350, and now we are retesting at 350. Now we see the market is vibrating. This algo, whatever this running this, that is running at the frequency of 350 on this day. We can easily catch it, and then this makes perfect sense. But you knew this right here itself, that this is what vibration is happening on this day, and they will change it. All right, so when they came 300, 300, 300, 100,000 volume, and they retested, this first thing was that, hey, this was rejected first time, and there was an order block created here. First retest is always rejection, right? Because this is which rallied from here. This was what created the 307, this was 350 move, right? This 350 move up impulse was built by this guy. So 350 up. Should be 350 here, right? If they want to continue. So now this is 300. This is half of it, right? Loss of power, short. You need to see the evidence to short it. That's it. You understand? All right, my friends. So you do understand. You are the master trader of Gann and Wyckoff. All right, let's try. Now look at this one. Now they're doing again 300. 300. Now they're vibrating 300. Now look at this one. Double 350, almost like 650. 650, and there's an order block sitting here. So aggression came 300, 300, 300, 600, right? Now we can join the aggression on the short side when the pullback happens with the same frequency has been hit, so they have nullified 300, 300, 300, nullified one time, came down, and the coming down this time came up 300, came up 300, right? So frequencies retest. Now it makes sense. Now volume was sitting here, we took a shot. Okay, perfect. Now what? We got out, right? Based on polarity, based on the lines and the targets. Now look at this wave. Now this wave has a lot of up and down junk going on here. So how do we see? Is it gonna go short? How do we see this is the next leg coming? How do we know this is gonna go back up here, or how we know it's gonna go down here? Volume is saying okay, potentially it might go down. So what is the evidence of this? It's going down. This is happening on a 60-minute chart. I can go down to lower time frame chart, like say even 1 minute chart, right? But we'll go there later. So what's going on here? 300, 400, war is going on. 300, 300, 300, 400, 400, right? Now we come up move the buyers. So sellers are aggressive here. Buyer 31, boom, again smash. 31, they couldn't, boom, they smacked it. 200, they're trying again to hold it. Look at this, very low, 124. This is almost gone. See this one, 124. Next wave, Wyckoff says 6.3. Look at this. They are attempting, right? When this pivot is done, there's no more juice left of the buyers to defend it, so they will break the bottom. Volume is happening, they broke the bottom. Now when Fibonacci ABC, this will be impulse, 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 right? This is impulse, measuring it. We are expecting at least 350 when all contracts are happening in real time. We have F369 indicators to do that also, but you can see real time is going to tell you 350. So 350 will be somewhere right here, right? And it stopped at this, somewhere in the back. $24,000. This was 24. Sorry, low was 20, almost 24,700, right? So if I go back, this was something was sitting here, 600. See that? Boom. Okay, he came back to retest it again. Alright, so you can keep an eye on this. Now, eventually, so this is how I would suggest you can measure this, how Wyckoff was suggesting. So it punched again, keep the frequency. This is 700. Now what? Frequency is moving down very aggressively. They are aggressive on the downside, pulled back up into the order block. Look at this, right? So you're looking at from here to here, 50% of this big move. The effort is losing. The buyers don't have any power. You can see they tried from here, they tried also. That's fine. They easily got 17, got to 50% of this. Okay, that's fine. Now what? It was just all this volume, boom boom, algo, whatever, day end. What is the time here? 4 o'clock, right? That's why everybody left home. They just algos pulled it back. So okay, so next day, how about this guy? Yeah, that's fine. We have order blocks going down. It's 500, 500, right? Roughly. You can't be just precisely because this is volume we're dealing with. So volume. So if I have to go long, I have to wait for this. I don't know it's going to continue like this or not. So I need to see that the low volume is gone. It is not gone here. This is 500. This is 500, right? They're moving at a very high frequency. A lot of volume, power, again power. So 500, 500, 500. There's also some technology, right? How many contracts can trade in one side and they flip it depending on the stocks. There's a float. You have to see NQ is different, but in the stocks you can do all that analysis. They were trading stocks at that time, big time, right? So they know, okay, how much is a float, how much share understanding is there, how much, and then they can see, okay, how much money can really move on one side before the stocks flip on the other side. But at least here we can see the impulse is 500, 500, 500. Now here 500 and 500 moved this huge. This 500 retested 300, right? So this 500 is here. Now, if this was a real 500, it would have been gone down here, right? Again, 500 produced this distance, same 500 produced half the distance on order block sitting here positive. We want to see the volume is also going to flip. So what do we do? Wait for this guy to come here, give us a pullback. Look at this. Down pressure is over. Here's a buy. All right, my friends, this is how the Wyckoff trading is done in volumetrics. And then you can add more juice on top of it, understanding the waves of volume. And if you don't know who Wyckoff was, you can ask the internet. Wyckoff. Understand it, right? Who he was. Here it is, Mr. Wyckoff. All right, so this is where he, as I said, in his short, avoiding confirmation bias in trading, right? So again, you can read up all this, how market moves in various ways, and then you can interact. There's a lot of coaching goes on, but now we haven't really seen the volume, actual volume, and there's a lot of patterns like these. Are you going to buy and sell? You can always add at these points engulfing patterns. Right here is engulfing bar. Okay, it's engulfing, bullish engulfing pattern. All right, but understand the distance, risk, reward, effort, the levels. Then you add some logistics on top of it, and then if you actually put the volume bars itself, and it will tell you how the closes are happening. So I think the one thing which works very well with this is the engulfing momentum shifts. Thank you.